Hello everyone, this is your host Vaibhav. I welcome all of you to today's session of Daily Stock, in which we are going to talk about the recent quarterly earnings report release of the United Parcel Service. It released its earnings with a downbeat note. Its revenues for the first quarter of this fiscal year are on the lower side, and along with that, there is also downward revision in its forward guidance for the second quarter of ongoing fiscal year. So that's a double whammy for the company where its revenues are on decline and it's also expecting further decline in the coming quarter. And I think in this kind of environment, it is going to be challenging for the shareholders, for the investors, for the traders to expect any uptake in the stock price. And that is what we are also witnessing in the share price moves of the company, which are on the downward spiral no matter which time frame you pick, whether it is short term, the medium term, or the long term, the things are looking bearish. So we will try to analyze the situation and see how we can profit, how we can take advantage on this clear-cut bearish case. So let us get started with the first look of its earnings report. This is the consolidated balance sheet. In the balance sheet, we are not going to go much deeper. We will be more concerned with its income statement and the reflecting cash flows. The revenues you can see are on the lower side for the 3 months ended March 31st, 2024. The revenues were at $21.7 billion, which is around 4 to 5 percentage point decline from the prior figures of $22.92 billion. The operating expenses are on the similar side. There is not much of a change. There is slight decline in the operating expenses, but still the operating profit is on the lower side, mainly because there is a sharp drop in the total revenues, while the operating expenses have only marginally declined. So that is reflecting worsening of the operating margin, and this is going to be something which management needs to be worried about. Coming to the net income figure stood at $1.113 billion, which is a substantial drop, that is almost more than 35% if we compare it to the first quarter of fiscal year 2023, where its net income stood at $1.9 billion. Now, here, this 35% decline in the net income is coming because we have worsening of the operating profit, operating margin, and then after that, there are other items which are not really helping the company, and that is pulling its total profit significantly lower. Now coming to its cash flow statement from the operations, the UPS was able to generate more cash this time around at $3.3 billion in comparison to the cash generated last time around at $2.3 billion. So there is this increase in the cash generation, positive inflows from the operations, and that is simply because there is less cash outflow on account of accounts payable this time around in comparison to the last time around. That explains this difference of almost $1 billion higher cash inflow this time around. On the investing side, there is cash inflow of $1.56 billion, which is almost opposite of the cash outflow of $1.8 billion registered in the first quarter of last fiscal year. And this is because the purchase of marketable securities was at $2.37 billion last time around, whereas this time around it's only at 50 million. That explains this sharp difference between these two figures. And also the sales and maturities of the market securities have contributed almost $2.7 billion of cash inflows to the UPS invest cash flows from investing activities. On the financing front, there was cash outflow of $3.66 billion, and last time around there was cash inflow of $4 million. This time around, this higher figure is because there has been a net change in the short-term debt that has taken away $1.27 billion, and for the other financing activity and dividends, these have also contributed to this negative cash flow, that is cash outflow, along with the repayments for the long-term borrowings. Overall, the cash position of the company still remains on the positive side. Its cash pile has gone up by $1.16 billion, and this is higher cash inflow this time around in comparison to the last year's numbers. So still, even though there is substantially higher cash outflow on account of financing activity, there is net cash inflow because there has been cash generation from the investing activity as well as from the operating activity. So these two increases have more than compensated for the higher cash outflow in the financing side. The forward guidance is also pointing to the negative development for the company. Here we don't have the time to search for the forward guidance, but from what I have read, I can say safely that there is expectation of further margin deterioration in the second quarter of this year, and maybe somewhere down the line by the end of the year or early next year, we are likely to see some turnaround, but that is going to take some time, and in the near future the things are likely to remain bearish. So our gaze, our horizon, of course, tends to be anywhere between few weeks to few months. So I feel that we can safely try to figure out the opportunities to take advantage of this bearishness in the United Parcel Services stock and see where are the opportunities utilizing the price movements and its formations over last few days, few weeks, few months. First, we will consider extremely short term, and for that, I feel that the candle period of hourly is good enough. There is this continuous decline where the stock has dipped from around 150 to 135 in the span of just 2 weeks, and it is not showing any signs of buying momentum on the lower side. It is continually declining, so that is pretty much expected since the release of its quarterly earnings, which is painting the picture in a bearish manner, and that is, I think, significant factor for these widespread sentiments of the bearishness in the market participants for the United Parcel Services stock. And keeping up with the bearishness, I feel adopting a sell on rally approach is going to be the most prudent thing to do in the short term. If your outlook is pointing on the downside, then I feel The only thing you can do is see if there is some retracement, if there is some correction and consolidation on the current level, or maybe some moves first on the higher side where it sees a short-term rally, and after due consolidation we can think about going for the new short sale trade where we expect further decline, maybe even towards 125 or 120. Those price moves are possible in next few weeks, if not in next few days. So depending on your time horizon, we do have a good chance of profiting here. But first thing we need to do is allow it some time for the consolidation and the further stabilization, and after that we can indeed take our chances for the fresh decline to set in. Now expanding our gaze to the medium term, we are using day as the candle period here, and in it you can see that for many months now it has been hovering in this price band of 135 to 155, 160, and it has been going up and down in these price range for a while now. So this time around it is again getting close to the prior swing low established way back in the October 2023. From that level it had rallied, but that rally proved short-lived and we saw further decline again, pushing the price of the UPS on the lower side. So from the current levels it is a bit difficult to say that how long this decline will last. Maybe if you had planned a bit earlier and had considered its price moves over last few weeks around this consolidation zone of 150, there I think the better opportunity was present. But at the current juncture, we will have to take bit of cautious approach, allow it some time. It is likely to consolidate first, because even if you go for the initiation of the new short sale trade at the current juncture, it might continue to go on the lower side, or it might go into a consolidation phase. If it does go into a consolidation phase, I feel that the risk reward ratio is not really going to be worthwhile the trade. So to avoid that kind of thing, we do have to wait, and maybe after a bit of consolidation we can initiate a fresh short sale trade while taking advantage of sale on rally approach. On the weekly chart, where each candle period has been defined at weekly, we get this view of its price moves over last couple of years. After the peak of this 233 way back in the start of 2022, we have seen this bearishly inclined consolidation in the UPS where it has lost value continuously in a slow and steady manner. It is showing these sharp dips and then consolidation and again sharp dips on the lower side. It had consolidated from this fourth quarter of the calendar year 2024 till this second quarter of his calendar year 2024. Now it is interesting to see if this ongoing deep decline is going to push it lower or not. If we see a fresh breakout on the lower side, I feel it opens the door for the UPS stock to accelerate its decline further, and the price levels of around 120 or even below that can't be ruled out in next few months. So keeping that possibility in mind, I feel that if you are willing to take the bait, maybe even some sort of shorting can be done at the current levels from the long-term view. But depending on your time horizon, you will have to assess the situation and find decent risk reward ratios so as to ensure that in the event of it going wrong, we don't really want to lose too much money. So as to take that possibility into account, I feel you will have to consider this time zone, and here there is a possibility of this breakout resulting in the sharp dip on the lower side. And take advantage of that. Now, that's all from my side for today's session. We have considered all three different time frames, the short term, the medium term, and the long term. Prior to that, we have also seen its earnings report, and all these things are pointing to the further decline. And I have also pointed some possibilities, some probabilities where we can take advantage of the situation while getting us a decent profit. And to that extent, try to see these analysis in the probabilistic manner and try to figure out the good risk reward ratio for yourself. Now, it's time for me to sign off for the day. I'll be back tomorrow with an equally interesting company to work with. See you next time around. Thank you all for joining in. If you have found the session informative and useful for your trading purpose, do subscribe to the channel. You can share it with your friends and family. And do come back for the next session. See you next time around.